I'm Charlotte McLeod with the Investing News Network, and you're watching part one of my latest interview with E.B. Tucker, director at Metallo Royalty and Streaming. Keep watching to hear his thoughts on gold's recent price action and where it could be headed next. I'm Charlotte McLeod with the Investing News Network, and here today with me is E.B. Tucker, director at Metallo Royalty and Streaming. Thanks so much for being here online with me today.
Thanks for having me.
Of course. So today we're going to focus our conversation, I think, mostly around gold. We last talked about gold at PDAC when the circumstances for the world and for gold were much different. I wondered if you could start by giving me your take on where we're at today in this interesting environment.
Well, Charlotte, it's very important to remember that when you look at things like gold and you say, where are we? You have to look at how it's performing compared to other assets. I mean, in life, you can't accurately look at anything until you look at things around it, right? You don't know how fast you're going till you pass another car, okay? So gold is at a 7-year high. I mean, we're right there at the high for the year, which is a 7-year high, and it had a tough March with the overall market. So look at the overall market down and then only back up part of the way. Gold down and then all the way back up to a new high. So what you call that is you call that relative strength. It means strength relative to the other assets, which are performing in a very weak way. So what it tells us is that we're in the early stages of this bull market. Like I believe I've told you, I think we're still in the first inning of the gold market. This is just now getting started. And what you've seen in April is very important. It's very telling for what's ahead.
Yeah, I think a lot of people have gotten stuck on what happened in March and being concerned about that and missing what's happened later on when it's seen that uptick again.
That's right. And so there was a lot going on in March behind the scenes. I mean, I had some futures trades on at the end of February, and we watched them raise the margin requirement 4 times in rapid succession. As anybody that knows what I'm talking about knows, it's impossible to keep futures. So we had to sell those. Well, there's many people having to sell, to do that, and that's why you saw the price sharply go lower of futures prices of gold. When the spot price of gold, so if you went out to the store and tried to buy an ounce of gold, you might have paid $200 more than you would have paid, if you bought it on the futures market. We've never seen that before. And so what that tells us is that, this price was something that was tied to the market. If you owned physical gold or if you tried to buy physical gold, you had difficulty doing it. These are all very important things. Now, by the way, that disconnect is back to pretty much even. And so things are returning to normal, and gold's at a 7-year high, which I can't say that about really many other asset classes.
Right, so 7-year high for gold, and those who've been following you will know that your call for this year is for gold to take out its all-time high. I can only imagine that since we last spoke, that's become even stronger. We must still be on track, but you tell me what you think right now.
Well, that's what we not only do we think that, we've gotten some clarity on how that might happen. And so how we think this will happen is that we think it'll happen in a very short period of time. For instance, now I don't know if this is coming in a week or a month or 2 months, but when this happens, we think that we're going to see a big move up, and then another big move up, and then a crest of the old high so quickly in a several day period that the mainstream media is caught flat-footed. And everybody says, well, gold was up $100 overnight, or it opened on Sunday night, it was up $100 in Asian trading. What do we think about that? Well, today it's back down 10, and then whoop, here it goes again. It's up another $100, and then you're past the old high. That's how it's going to happen. And so the reason why we think that is because we've been studying the market as we've gone through this last, since you and I last talked. I mean, it's been about 2 months. We've been watching this, and we've been thinking nobody's involved in this market. This is only the kind of the old hands in the gold market, and there's no speculation here. And so we've now determined that maybe it's this month, maybe it's next month, maybe it's the summer, maybe there's a slight pullback in the meantime. That we don't know. But we do feel confident about the call this year, and we also feel confident that it's going to happen very quickly. So what that means for the viewers is that this is kind of a single-use canister. You have something that says use only once. This move is something that you want to be positioned for before it happens. And so you don't want to be in a situation where you say, well, I'll wait until I'm sure, because there's a huge cost to that. This catches people off guard. It's a big move, and I think it's one that's worth being patient for. We're not talking about years, Charlotte. We're talking about weeks or months. I mean, it's not that long of a time.
Right. Yeah, definitely. Before, that was one of the things I was asking is, can you tell me what triggers it? Can you tell me what it will look like? It sounds like we're getting very close, but there is still time. If you didn't listen before and you didn't get in then, you can still do that at the moment, at
And
least.
you have proof. You can see right here what we were talking about, because I think I was telling you before that you have how and when. So you
Hmm.
kind of start to get a picture of how something's going to happen, and then you can really start to see when. But you can't look out and say, so far this is what will happen in the future. But you can say, I see the setup. I see what this is going to look like, and now I see the triggers happening. And so now people that haven't gotten in can look back and say, okay, I saw what happened in March. I saw the recovery. I saw physical gold trading for wildly more than paper gold, and now I'm seeing this come together. I mean, silver's up 50 cents today, and it's a really big move. I don't want to get distracted on silver, but I mean, silver is drastically undervalued compared to gold, and that when that goes, that's going to go in a pretty big way. Talking about percentages, I mean, silver could easily go from 15 to 20 very fast, and that's a huge move. Again, I think gold is the market to focus on. Is where the energy should be put, is gold. Silver is an ancillary situation, but my point is that you don't want to sit and say, well, I don't know, I'll wait and see if it comes back to 1100 or something gold. I mean, it's just crazy. What I've seen, I used to think that gold goes to 2,500, and then we start kind of selling Metallo, and we sell the royalty company. We get out of Dodge. It's getting too hot. I've completely changed my mind. The governments of the world stimulated to the tune of $12 trillion in a month. And I just sat there watching this thinking, you got to be kidding me. There's only $10 trillion of the gold on the whole planet. And then there's only about 1.6 trillion of that gold that you could even invest in. And you have $12 trillion of stimulus dumped right into the world economy in less than a calendar month. It's unbelievable. And so I've changed my mind about this, and I think that the upper limits need to be kind of expanded a bit more. I mean, we don't have a specific target, but we now think that, when you get into the 2,500, 2,400 range, all you're doing is waking up more people to watch in the mainstream. So, I mean, you're so early to the party that you got to turn the lights on when you get there. I mean, that's how early you are.
Okay, so yeah, if you're watching gold, I would imagine you have to be watching what's going on with governments around the world, stimulus efforts. Is there a way to emerge from that after all this is over? How does that ever go back to some kind of normality, or does it not?
Well, in the book, that's why I'm writing a book about
Right.
this subject. Yeah, right now it's called "Why Gold, Why Now?" And so in the first part, we talk about government's history with money, and it gives people kind of a very quick study of how we got here, and talk about some historical events so that people can see a pattern. There's just a pattern that happens again and again. And so we show that pattern, we identify it, then we go to why now. And what we see is that there's a roadmap right now, and we track that roadmap over the last 20 years, and then we tell people where that map is headed, and it's headed to a progressively more extreme situation. I mean, I can tell you that the stimulus efforts will fail to revive economic growth to a point that satisfies markets. Going to have a lot of problems with commercial real estate in the U.S., for example. You have buildings, if 10% of the people move out, then all the common charges go up, and then you go to refinance the building, and there's problems. So this is going to be something that takes a second to work out. Going to have problems with the restaurant industry. They already at capacity, it's a tight business. Take out 50% of the people, and it's untenable. It takes time for these things to work out. So what's going to happen is you're going to continue to need more stimulus. Well, the power to stimulate is being lost by governments. We can see that right now. So they're going to need more and more dramatic tools. And we say this in the book. I mean, I'll go ahead and give it away to you. I think you have to read it to really get the full flavor. But you go from this to negative interest rates, because negative interest rates is where the Fed gets you to do its job. Okay. If you have 100 grand in a checking account and you're being charged -1%, which means you're going to pay 1,000 to the bank to keep the money there, you're going to pull that money out and do something with it. You're going to either invest it in stocks or buy a house, or you're going to do something. Maybe you're just going to spend it, but you're not going to pay a fee to the bank. So negative interest rates get you to do something with your money, which stimulates the economy. And so you're going to go through that. Then I think you're going to go through what's called MMT, which is basically the government says we need $2 trillion more, and then issues a bond directly to the Fed. So my point is, I don't want to get too sidetracked in this, but it's not going to be normal. Okay.
Mm-hmm.
It's not going to be like it was. And so to sit there and think, well, it's got to be like it was because it was like that. That's not going to happen. That's not how markets work. The markets price in the future. And so when you look to the future, you see more and more dramatic efforts by government to hold on to power. And as this happens, you've got to arrange assets accordingly. There's certain industries that you want to avoid, for the foreseeable future, like for the next, 6 to 12 months at least, and then to see how these work out. Banks, banks are underperforming drastically. The S&P 500, consumer discretionary, things where people say, do I need that Coach purse? Probably not. So these types of things suffer in this type of environment. And as time goes on, what happens doesn't look like what we just came from, if that makes sense.
Thanks for watching part 1 of my interview with E.B. Tucker. Click below to watch part 2, which covers why he thinks royalty and streaming companies are a good investment, even in today's environment, and what Metalla Royalty and Streaming is up to right now.